Namaste. Good morning. Let's do this chapter of PGBP. That is the focus of today. Profits and gains of business or profession is the focus for today. Okay. Having completed other heads, today we will complete the 5 heads and 2 more classes. One for computation of total income. We will do a lot of questions. And another for TDS, TCS things, so that we are very clear about how to approach direct taxation. Okay. Before starting itself, first from the examination point of view, let me talk even before going into the concept. What is essential in PGBP to know about the examination angle? All the disallowance provision. Ensure that you know everything about the disallowance, TDS disallowance, income tax disallowance, payment to a relative disallowance, payment in cash disallowance, provision for gratuity disallowance, payment to unrecognized. Minimum 2 of this will come. Certainly 43B and especially nowadays 43BH, payment to micro and small enterprises, and also 43B statutory payments. Okay, definitely these are there. And then comes the most important, depreciation computation. Depreciation computation. So this is also one important aspect of our learning. These are sure shot adjustments in a question. It can be in any manner. And then comes this concept called cost of asset. What is the asset value? Cost of asset also forms an important question. How the asset value, what will be added, what will be reduced, we all know. We are going to see that. So these are all repeated things. These are all repeated things. Okay. And in this depreciation, we all know that normal and additional is not there for concessional tax regime. So that is getting tested. That is getting tested. When we work out today the solutions, we will understand this. After this, there is one section which I am again 40B. It's a standalone question. It's a remuneration and interest paid to a partner by a firm. Okay, what is the provision for that? What are all the limitations for that? Okay, this also becoming a standalone question, if not with the because we don't have assessment of firm, so they are not asking it as a firm, but as a standalone question, how to do it. Let us now start with the chapter profits and gains of business or profession. Okay, without wasting any time, I want to start with the first thing called modes of payment. From, of course, in capital gain, we have seen this. Of course, in IFOS, we have seen this, but the bigger impact is there in PGBP also. Okay, be it cost of the asset, be it 40A subsection 3, payment otherwise than by approved modes. Okay, be it 50C stamp duty, on which date I should take, on which date I should. For all these things, this is essential to understand. And what is easy to understand is what is payment otherwise than by approved modes, unapproved modes. Let's colloquially known as unapproved modes, which are 3. Cash, bearer check, cross the check. Cash, bearer check, cross the check, or payment otherwise than by approved modes. These are the modes of payment which are not recognized. if you are making by this, either there will be a disallowance or there will be an impact. Okay, let's try to understand it by a chart where all this gets affected. Okay, payment otherwise than by approved modes. Okay, we all know it is in excess of 10,000. Payment otherwise than by approved modes, which are cash, bearer check, cross the check, made. What are all the impact I will get because of it? If it is for an asset, if the payment is made for an asset, if I make more than 10,000 for purchase of an asset on a single day to a particular person, okay, not to be included in asset value. In asset value. Yeah, take down this chart. Not to be included in asset value. Okay. Okay. No depreciation for that particular amount. No depreciation for that particular amount. Suppose I am purchasing an asset for 20 lakhs. Due to emergency requirement, I paid 2 lakhs by cash. Friends, depreciation can only be for 18 lakhs now. Cost of asset can only be 18 lakhs now. Cost of asset cannot be 20 lakhs. Payment otherwise than by approved modes, if it is for asset, not to be included in asset value, no depreciation. Are you following Krishna and any other person online?
Yes, sir.
Am I clear? Am I clear to you? So if it is for an asset, please understand it should not be included in the cost of the asset. Don't include it in the cost of the asset. If it is for a revenue expenditure, if it is for a revenue expenditure, okay, the simple provision is disallowed under section 40A subsection 3. Disallowed, the expenditure will not be allowed under section 40A subsection 3. So if it is for a capital expenditure, especially asset, it will not be included in the value of the asset. If it is a revenue expenditure, disallowed under section 40A subsection 3. Of course, you know the provisions of section 50C, section 43CA, and section 56(2). What is that? Section 50C, in the last class we saw, stamp value should be taken. If payment is made by approved modes, if the advance is paid by approved modes, then stamp value on the date of booking or agreement. If no advance is paid, if advance is paid by unapproved modes, stamp value on the date of registration. Stamp value on the date of registration. Similarly, if this is land held as capital asset, this is land held as stock in trade, same provision, and this is receiver of the gift, same provision. For the receiver, Difference between stamp value and consideration paid is known as inadequate consideration. If that exceeds 50,000, it becomes taxable. If that exceeds 50,000, it becomes taxable. And on which date stamp value I should take? Same. Okay, so payment otherwise than by approved modes, there also has an impact. And we all know there are some cases of exception. Yeah, there are some, apart from 48.3, I will talk there about transport operator. Here, remember, you can pay to the government, you can pay to the bank, these things. You can pay to the government, you can pay to bank. Okay, there will not be other exceptions. I'll speak in 48.3, like agriculturist, fisherman, transport operators. I will speak, but this is general. This is general. Am I clear to you? Okay. So this is a repeated question in our examination. Oh, payment has been made for an asset in cash due to emergency, due to bank holiday, whatever they say, it is not allowed. It is not allowed. And this is also a repeated scenario in our examination. Okay. So first thing we try to understand is payment by approved modes, payment otherwise that, because it covers lot of provision. I gave it at the opening itself, though we are going to speak again and again about it. Actually, one more place I missed. Okay, this asset includes 35 AD also. 35 AD also you cannot pay by approved, unapproved modes. They will not include it in the cost of the asset. 35 AD also should be included there. Okay. How do I consolidate this chapter? Friends, when I speak of income, I have only two sections to speak about income. Whenever we speak of income under this chapter, it should be either section 28 or section 41. Once more repeating, income under PGBP will either be under section 28 or under section 41. And this is known as deemed income. This is known as deemed income. So only 28 speaks about direct income. Only 28 speaks about direct income. Section 41 is deemed income. Let us talk about 28. Any compensation received for breach of contract, for change in managerial agreement, non-compete fees are all considered as income. Are all considered as income. Am I clear to you? Any compensation received is considered as income. Any export incentive is an income. Okay, sometimes they say sale of license, cash received, duty drawback received for export of goods. All these things are to be treated as business income. Okay, friends, this part of it, be very clear. Benefit or perquisite in the course of carrying on business. A lawyer gets a wristwatch from a client for winning his case. Apart from paying the fees of 2 lakhs or 3 lakhs, a customer gift 40,000 worth of wristwatch. It is not 56 now. Gift, it is not receipt of gift. There, what is receipt of gift? Out of love and affection. Here, in the course of carrying on business or profession, the fair market value, whatever let it be the value, will be treated as income. Will be treated as, because the wristwatch was not given just like that. The wristwatch was given because he has argued my case well. A doctor who is able to treat the patient in a better manner gets a gold coin, gold chain, gold ring as gift. A agent who has performed well, who has achieved the target, gets a Maruti car, gets a gold coin. All these things, my dear friends, are perquisite in the hands of the receiver, or perquisite in the hands of the receiver. The fair market value will become taxable. The fair market value will become taxable. Any benefit or perquisite received in the course of carrying on business will be taxable. Okay, so this part of it, please keep in mind. In some questions, we might see gift received, which is taxable under other sources. No, sir, that type of gift is taxable only here. Okay, when we are doing the comprehensive, that is total income questions, we will talk about that. Okay, shall I proceed? Okay, this part of it I will speak in 40B. Conversion of stock into asset. Vasant & Co. has taken 5 ACs from their showroom and put it in their office. Please remember, it will be taken as sale of asset. Okay, conversion of asset into stock in trade, capital gains. Conversion of stock into asset, PGB. Okay, conversion of assets. So far I was having the land. Now I start my real estate business and convert my asset into the fair market value will be treated as the cost of the full value of consideration, and it is taxable in the year in which it is sold. There, the provision last class we saw. Now, conversion of stock into asset. Conversion of stock into asset. I have some jewelries which I convert it into my investment, a jewelry merchant. It will be treated as you have sold that. Had you sold it to a third party, how you would treat it? In that manner, you should be. And repeated question I find in this. Repeated question I find in this. Subsidy received. If it is for a depreciable asset, subsidy received. If it is for a depreciable asset, adjust it with the cost of asset. All other subsidies will be treated as income. Government gave me subsidy to buy machinery, adjusted with the cost of the machinery. Government give me subsidy to put pollution control equipment, to put solar powered equipment, adjusted with the cost of the asset. Are you understanding? Are you understanding? Government gave me subsidy for purchase of land. It should be treated as income because land is not a depreciable asset. It should be treated as income. Are you understanding? Online friends, are you understanding this?
Yes,
Yes,
sir.
sir.
So that is how subsidy should be treated. Remember, this is also a repeat because it works out to the cost of the asset. It works out to the cost of the asset. Section 28 speaks of some direct income. What I want you to remember, apart from partner, we will see it there. What I want you to remember is perquisite or benefit in the course of carrying on business, subsidy. Okay, these things alone remember. Okay, now I am going for expenditures. Allowable because the law uses the same term. What is business income? Taxable business income. Revenue, which consists of 28 plus 41, section 28 and section 41, minus the most important word here is allowable expenditure. The most important word is allowable expenditure. Okay, revenue minus allowable expenditure. Our allowable expenditure is divided into 3. Expressly allowed 30 to 37. Expressly allowed 30 to 37. Interestingly, 30, 31, 32. 33 is not there in our syllabus. 34 is not there in the law itself. A part of 35 is there in our syllabus. 36, 37. Okay, 30 to 37. But at the beginning, I said this is the most important. These two are the most important part of our understanding. Let's go slow and understand the expenditures. Expenses expressly allowed by law. First 3 sections speak only about asset. 30, 31, 32. All the 3 speaks about asset. 30 speaks about building. Other than depreciation, what will be allowed? Rent, repairs and maintenance, insurance, municipal taxes. These are allowed. Friends, in the last class, we saw some questions in house property. 50% of the area is used for residence, 50% for business. Or 50% of the area is let out for residential purpose. Other 50% he is using it for his own business. When he uses, there we have written, it will be dealt with in section 30. When you are using it for your business, you can claim expenditure. What are all the expenditure you can claim? Municipal taxes 50%, actual repairs and maintenance 50%, actual insurance, fire insurance or any ground rent, everything 50% you can claim. Whereas in house property, you cannot claim anything. 30% standard deduction covers everything. Here, you can claim individually, and 50% of interest, you can claim it as deduction. Are you understanding this? Whatever is the actual expenditure incurred will be allowed for building. The same is for plant, machinery and furniture. Whatever is the actual expenditure incurred. You will wonder 2 things. Depreciation, it is not covered because it is covered in section 32. Apart from that, there is also 36 and 37, which talks about certain expenditure. So generally, if it is a revenue expenditure, it will be allowed. For building, plant, machinery, furniture, any revenue expenditure will be allowed.
Here too, municipal taxes paid will only be.
No, here municipal taxes is allowed. Okay, this is a good question. I will answer that question as a standalone question. Is municipal taxes for if the building is used for business? In the case of house property, to get it allowed, it should be paid on or before 31/3/26. In the case of house property, it should be paid before 31/3/26, then only it is allowed. Whereas in the case of business or profession, if it is due on 31/3/26, whether it will be allowed. Outstanding as on 31/3/26, whether it will be allowed. It's a very interesting answer. Yes, allowed, subject to section 43B. You should have paid it before the due date of filing return. Any taxes duty payable to government, any taxes duty payable to government will be allowed only if it is paid within the due date of filing returns. So, municipal taxes in the case of house property is in the same year, in the financial year 25, 26. Whereas municipal taxes in the case of business or profession allowed subject to 43B. Now, going to the most important section, section 32, depreciation. Section 32, depreciation. What I want you to know for the examination perspective only, I am telling you now. Depreciation is group of assets, block of assets. Okay. It can, what is meant by block? Assets of similar nature, having same rate of depreciation. This is known as a block. Building is also 10%. Furniture is also 10%. Can I group it together? No. It is not just same rate. It should be asset of similar nature. It should be asset of similar nature. Pollution, machinery is also 15%. Car is also 15%. Can I group it together? No. Can I group it together? The answer is no, because it is not asset of same nature. Okay. Just give me a minute. I'll address this problem. Okay. So, assets of similar nature having same rate of depreciation. Am I clear to you? Will be grouped together and on that group balance. Sometimes a car used for hire, that is Ola, Uber, they use it very much. So they are given 30%. Other cars are 15%. Just because they are cars, they cannot be grouped because they are not having the same rate of depreciation. To group it, assets should be of similar nature and same rate of depreciation. Two assets for which no depreciation under income tax act are land and goodwill. Land and goodwill will never have any depreciation. Land and goodwill will never have any depreciation. Only the owner can be claiming, and if it is used for business or if it is used for partly official, partly personal, that personal part of depreciation will also be disallowed. That personal part of depreciation will also be disallowed. And plant is a very big term here. Computers or plant, fans or plant, air conditioners or plant, electronic, electrical, vehicles, computers, books, everything will be treated as plant. Okay, so the first thing you have to, from examination perspective, group it and claim depreciation. Don't claim depreciation for land and goodwill. Don't claim depreciation for land and goodwill. Okay. How to claim depreciation under income tax law is a format. How to claim depreciation is a format. First thing I want the class to understand is no proportionate depreciation in income tax. Before going into anything, I want certain points to be understood by you. No proportionate depreciation. Go on. ஆஃப் ஆயிட்டே இருக்கு. இது கரெக்டா நிக்கலன்னு நினைக்கிறேன். அதனால எனக்கு இதுவும் ஸ்பீக்கரும் மாறுது. So, land and goodwill depreciation cannot be claimed and group of. Before going into, let me be very clear. Proportionate depreciation is never a concept under income tax law. What is proportionate depreciation? 7 by 12, 9 by 12, 3 by 12. That is never a concept under income tax law. We have some other concept. We will see that. Second, whatever may be the date of sale, for the asset sold, no depreciation. Repeating, whatever may be the date of sale, for the asset sold, there is no depreciation. Whatever may be the date of sale, for the asset sold, there is no depreciation under income tax law. The next thing to understand is date of, even if you sell it on 31st March 26, whatever is the sale value, you will reduce and then only compute depreciation. In accountancy and all, till the date of sale, you can claim depreciation. That is not possible here. So, no depreciation, whatever may be the date of sale. What is this concept of proportionate depreciation under income tax law? This is only for additions during the year. This is only for additions during the year. This is only for additions during the year. Remember, if an asset is in opening balance, don't worry about how many days it is used. If the asset is okay, this is only on additions during the year, and that too the date of put to use. If date of addition and date of put to use is given, only use put to use. Remember, if date of addition and date of put to use is given, take only put to use date. If put to use date is not separately given, then it is a plug and play asset. As soon as you buy, you can use it. Okay, date of put to use. If it is more than 180 days, okay, claim full depreciation. Claim full depreciation. 100% of eligible depreciation, you can claim it. If the asset is put to use for more than 180 days, 100% of eligible depreciation we can claim. Less than 180 days, I can only claim half of eligible depreciation. Half of eligible. If 15% is eligible, then what I can claim is only 7.5%. Remember, understood this? Once more, I am repeating. Addition is depending upon date of putting the asset into use. Okay, if it is not given, date of addition. If it is more than 180 days, to be precise, look for October 3. Up to October 3, it should be more than 180 days. Claim full depreciation. On and from October 4th, if you put to use, claim only half of the eligible depreciation. Only half of the eligible depreciation. And please understand, this is only for addition. Suppose an opening balance asset. This year I have used only for 90 days. Don't discriminate. Give full depreciation. Only for additions made during the year, this provision is applicable. This provision is applicable. Am I clear to you? Remember, for sale, no depreciation. Additions are divided into 2. Up to October 3rd, I can claim full depreciation, and beyond that, I can claim half of the eligible depreciation. Now I go for the format. Opening WDV is nothing but last year's closing WDV. Opening WDV as on 1/4. Additions are divided into 2 based upon the date of putting it into use. For 180 days or more, for less than 180 days. Okay. And deletions, take out the entire sale value. This is not accountancy. 50,000 worth of asset is sold for 70,000. In accountancy, you will, from the asset, you will reduce 50,000 and take 20,000 to profit. This is not accountancy. Here, entire 70,000 will be reduced from the block. Actual sale value, whatever is the actual sale value received or receivable, will be reduced from the block. And if I have this as A, B, C, D, my assumption is always first in, first out. What I would have sold is old assets. So, A plus B minus D into full rate. C into half rate. If this is 10 lakhs, 3 lakhs, 2 lakhs, 4 lakhs. Now, eligible for depreciation is 15 minus 4, 11 lakhs. How will I compute? 2 lakhs into half the rate, remaining 9 lakhs into full rate. Another way is 10 plus 3 minus 4 into full rate, C into half rate. Are you clear? Are you clear in this? Okay. This can be the method of calculating depreciation. Worst case scenario, I will tell you something. If A plus B minus D is negative, then C minus this into half rate. Suppose this is 10 lakh, 3 lakh, 2 lakh, this is 11 lakh. Now available for depreciation itself is 1 lakh. 1 lakh into half the rate. Very, very rare. Very, very rare. But I'm just providing you with the enough, if at all an examiner test you. Are you understanding? Are you understanding? Once more, I'm repeating these things. In the computation of depreciation, opening plus more than 180 days minus sale value on this, whatever is the balance, into full rate. Okay, less than 180 days into half rate. Okay, suppose this itself is negative, adjust this negative and compute half rate. If overall answer is negative, that means it's a short-term capital loss. It goes to the next chapter. Okay. Example 1. Okay. Opening 10 lakhs. Addition more than 180 days 5 lakhs. Less than 180 days 8 lakhs. Okay. Deletion 3 lakhs. If this is example 1, 10 plus 5, 15 minus 3, 12 lakhs into full rate, 8 lakhs into half rate. Is this clear? Is this clear? Example 2, opening 10 lakhs, addition more than 180 days 5 lakhs, Less than 180 days, 8 lakhs. Deletion, 12 lakhs. Deletion, sorry, 17 lakhs. Deletion, 17 lakhs. So what happens for A plus B minus D becomes minus 2 lakhs. A plus B minus D becomes minus 2 lakhs. So C minus 2 lakhs, that is 8 minus 2, 6 lakhs into half rate. 6 lakhs into half rate. Rarest scenario. Rarest scenario. It will not happen. This will be the only popular thing. This will not happen. But I am just preparing you to the worst case scenario. Suppose there is a third example of opening 10 lakhs, more than 185 lakhs, less than 188 lakhs, okay, sale value 25 lakhs. Block is gone. Block is gone. The remaining 2 lakhs is capital gain, section 50. Section 50. Am I clear? Once more. Okay. So remember this 180 days, more than 180 days, full depreciation. Less than 180 days, half of the eligible depreciation. Okay. That needs to be computed so that you will arrive at closing. The notes follows. Preceding year's closing balance is current year's opening balance. Purchases or construction will include, I will talk about the additions to asset little later. Assets are divided into 180 days or more or less than 180 days based upon the date of putting it into use. More than 180 days, 100% of eligible depreciation, otherwise 50%. There is no concept called proportionate depreciation. Only more than 180, less than 180. The whole of the sale value will be reduced from the book value. The balance is available. Only diminishing method, except for electricity company, leave that. Okay. Okay, only diminishing balance method. I will go to the other one and come here. When does a block goes out of existence? When does a block that is totally taken out of existence? When all the assets in the block are sold, when the sale value exceeds the balance available. When the sale value exceeds the balance available. I told you the example. This total is 23 lakhs. I have sold whatever may be the asset. All the assets are something for 25 lakhs. Block is gone. And there will be a capital gain that will go to the next chapter. Friends, you are supposed to remember these popular rates. Building 10%, machineries 15% including car, computers 40%, Furniture, intangible. Please try to remember before going to the examination. Just write it once and see. Before going to the examination, just write once and see. Am I clear to you? Okay. Then comes this concept called additional depreciation. Then comes this concept called additional depreciation. What is additional depreciation? It is a benefit provided for Make in India. Okay. Only for manufacturing sector. All of us to listen. Only for manufacturing sector. Once to listen. Only for plant and machinery. Plant includes computers, vehicles, pollution control equipment, everything. Used directly or indirectly in the manufacturing process. That is where is the key point. It is only for plant and machinery. I am buying a car for my office. I am buying a computer for my office. I am putting a machinery for my office. Only for plant and machinery used in the process of directly or indirectly in the manufacture of goods. Then only additional depreciation. It should be a new asset. It should not be second-hand asset. Even an imported second-hand asset will not be eligible for depreciation. Repeating, even an imported second-hand asset will not be eligible for depreciation. It should be a new asset. Okay. Then only it will be treated as for additional depreciation. What is the rate of additional depreciation? 20%. But if you use it for less than 180 days in the year of purchase, then you will only get 10%. The balance 10% can be claimed in the next year. Okay. Once more the theory. Okay, about additional depreciation. Only for manufacturing entities. Even printing of books will be considered as manufacturing. Even biotechnology will be considered as manufacturing. Electricity is also manufacturing. Only for manufacturing entities. Only for new plant and machinery purchased during the year and used directly or indirectly in the manufacturing process. Vehicles, computers which are used in the manufacturing process are eligible for additional depreciation. From the go down to the manufacturing, a vehicle, a forklift vehicle, a EV is bringing materials that is eligible for additional depreciation. A computer checks the quality of goods that is eligible for additional depreciation. Okay. Office usage are not eligible. Rate of additional depreciation 20%, used less than 180 days 10%, where only 10% is claimed in the year of purchase. The balance can be claimed in the immediate next year. And please remember, additional depreciation cannot be claimed under concessional tax regime. Additional depreciation cannot be claimed under concessional tax regime. Am I clear to you? Am I clear to you? And now I am going to go into the most important, because this is being tested often, concept of cost of addition. What is included, what is not included? Freight, installation, direct expenditure, and please remember, very often they are asking interest till the date of putting the asset into use. The question will say, I got an loan from the bank on 1st of April at 10% per annum for purchase of asset. and I put it on to use from 1st of November. April to October, the interest should be included in the cost of the asset. April to October. November onwards, it's a revenue expenditure. Interest till the date of putting the asset into use. Read once, twice, thrice the adjustment. You will understand it. Interest till what date I should capitalize it. Okay. And any GST input credit, subsidy received, we all know we saw. Any payment in excess of 10,000 will not be included. Okay, leave the special cases of addition. Up to this, please read it once. Please read it once. Are you understanding? Are you understanding? Okay. Okay. Please remember, depreciation alone, read repeatedly and try to understand it better.
Sir, I have a doubt, sir.
Sorry, I couldn't listen to your doubt. Yeah, go ahead with your.
Yes, sir. The transport and the 35,000 pay பண்றது, but that will not come under this, no, sir.
No, that is a revenue expenditure. This is a capital expenditure.
Okay, sir.
Just asking you to look into the practical. You can see the screen and answer MCQ 5. You can see the screen and answer me MCQ 5. The WDV of a block of plant and machinery on 1/4/25 is 3,20,000. A second-hand machinery. So obviously there is no additional depreciation. costing 50,000 was acquired but put to use on 1/11/25, less than 180 days. During Jan, part of the block was sold for 2 lakhs. The depreciation will be opening WDV 320, less than 180 days 50, minus 2 lakh. So 320 minus 2 lakh, 1,20,000 into 15% plus 50,000 into 7.5%. How much? 21,750. Repeating, 1,20,000 into 15%. How I got 1,20,000? 320 minus 2 lakh, 1,20,000 plus 50,000 into 7.5% plus 50,000 into 7.5%. Is that clear? Is that clear? Okay. Okay. Ananya, is this clear?
Yes, sir. Thank you.
Friends, very slowly, very slowly, let us read it once, twice, thrice. Case scenario 1 in page number 77. You can see the screen, but have the notebook and calculators ready. Lux Enterprise, a proprietary firm of Mr. Lucifer, a resident individual in Maharashtra, is engaged in the business of printing and publishing. Is printing and publishing manufacturing? Darshini, is printing and publishing manufacturing? Ilakya? Krishna?
Yes, sir, it was mentioned.
It is mentioned. We saw. Okay, please understand. Okay. Power, printing, everything. Manuscript is converted into book. It is manufacturing. It is manufacturing. So remember, the following are the details. Office building constructed, date of purchase, date of put to use 1,85 lakhs. What is the rate of depreciation for office building? 10%. BMW car, date of convertible. Okay, 1 minute. BMW car alone, please wait. Machineries used in printing and publishing, which will also be eligible for additional depreciation. 9,12,500 put to use for less than 180 days. Written down value is 1,45,000. Written down value is 1,45,000. Okay, one mistake I made while typing. I missed this particular point. Okay, BMW car, 23rd August 2019 and put to use for in 25th August 2019. For that alone, we need to compute what is the current value. We will go slow. While typing, I missed that. Then when I was working out the answer only, I noticed that point. That's why I released the material before that. Okay, right. Based on the facts of the scenario, choose the most appropriate answer. What would be the amount of depreciation allowable on plant and machinery for the financial year 25-26? Friends, opening WDV 1,45,000. In the current year, I have a purchased and put to use for 9,12,500 less than 180 days. Okay, assuming that I have not used my I assume that I am in the old tax regime or the optional tax regime. Tell me what is the depreciation. 1,45,000 opening, 912,500 is my addition. Less than 180 days. Which is the correct answer. Additional depreciation of 10%. For 9,12,500, we will also get additional depreciation of 10%. This one, second answer, 23,34,688. Friends, okay, opening WDV is 15%, purchases 7.5%, additional depreciation of 91,250. I will get 23,64,688. Are you getting it? Are you understanding this? Okay, good. Question number 2. What would be the WDV of plant and machinery as on 1/4/26? Simple. Whatever is the opening balance, 1,45 lakh plus 912,500 minus 23,34,688.
Option 3.
That is 1,30 lakh 77,812. 1,30 lakh 77,812. Is that clear? All of us, are we understanding this? Okay. What would be the WDV of office building constructed as on 1/4/2006? Remember, what is the date of construction, date of put to use? 30. 1,85 lakhs minus 5% because less than 180 days. Less than 180 days. 1,75 lakh 75,000. Sorry, friends, my answer is wrong. It should be 1,75 lakh 75,000. As on 1/4/26 only they are asking. It's put to use also, right? If my answer is wrong, I will change the answer. It is your answer is right. Your answer is right. Okay. Minus 5%. Okay. Friends, this is important. What would be the amount of depreciation for BMW car? Now I want you to understand it is purchased in 2019 and put to use. From 19, we have to compute the depreciation. 94,80,000 for 1920, 15%, 2021 like that. Please compute and find out. It is not straight line. So every year you have to work out separately. Took off this question. Okay, you please leave this question. I thought I deleted this question. Yes, I deleted this question. You please leave this question. You please leave this question. I will tell you why I want you to leave this question also. I will tell you. In 1920, the rate of car is 30%. In that year alone, to promote the car sector, they gave a 30% depreciation. This question is on that basis. I'm sorry for including this. Please leave this question. Please leave this question. Online friends, please leave this question.
Okay, sir.
I'm going into the case 2 scenario. I think this has profit also as a question. Yeah, we'll see that later. We'll see this later. We'll see this later. We'll come back. We have more to depreciation. We have more to talk about depreciation. Okay, right. So this is depreciation. The most important aspect. Please be always vigilant. Sure question of depreciation computation. And then comes, we know about unabsorbed depreciation. It can be carried forward and set off against any income, carry forward for an indefinite period. Okay. And there are benefits available. So don't worry about, and don't worry about electricity company depreciation. I don't see a question over there. Then comes scientific research expenditure, section 35. Scientific research expenditure. There is no 33 is not there for your syllabus. 34 is not there in the law. That leads us to section 35, scientific research expenditure. It is divided into two: in-house research expenditure and contribution to external agencies. Once more repeating, it is divided into two: in-house research and contribution to external agencies. In-house research expenditure, okay, 100% of the revenue and capital will be allowed except cost of land, and past 3 years expenditure can be accumulated and claimed if this is the first year of operation, not in the first year. If this is your incorporation year, commencement year, in that year, past 3 years, except cost of land can be claimed. Contribution can be national lab. This is by government, so you don't need that word approved. For all other things, approved should be essential. National lab is run by the government, so you don't need the word approved. And then comes approved research institutions, agencies, universities, colleges, and public limited companies whose main object is research. This cannot be claimed under concessional tax regime. What? Only contribution. Can this be claimed? Yes, in concessional tax regime. Remember, this can be claimed under both the regimes. In-house research expenditure can be claimed under both regimes, whereas this alone cannot be claimed. This can be claimed only in optional regime, not under concessional regime. Okay, there are some books which have said scientific research expenditure cannot be claimed under concessional. No. Contribution to external agencies alone cannot be claimed under concessional tax regime. In-house research expenditure can still be claimed. Am I clear to you? Then comes the main aspect of 35 AD. Specified business expenditure. What is specified business? Please remember agricultural storage, 2-star hotels, hospital, infrastructure facilities. These are specified. Okay. Before going to the examination, you should read it just this part alone once to just remember what are all specified business is. Majority of the time in the examination question, they will put 35 AD or specified business. But only once they have not put. So on a safer side, I am telling you what is specified. Agricultural storage, that's what is the popular specified business. 2-star or above category hotel, hospital, infrastructure facility, housing projects, sugar, etc. 100% of the capital and revenue expenditure of the current year and past years can be accumulated and claimed. Land, goodwill, financial instruments are never asset. Okay. Remember, here also, any expenditure in excess of 10,000 made otherwise than by approved modes will not be allowed, will not be included in the cost of the asset. No depreciation. Loss of specified business can be set off only against the income from specified business. And this whole 35 AD is not available under concessional regime. This whole 35 AD is not available under concessional regime. Am I clear? Read it. I have some more point to add. Read it once. Am I clear? Now, I'm going to later part of the class discuss this, but keep it something in your mind. All of us, please listen. 35 AD, if the assessee is following concessional tax regime, you cannot claim it. You can only claim depreciation for this asset. No question of 35 AD. If the assessee is following optional tax regime, can I claim 35 AD? Yes. But you have to also work out AMT. Alternative minimum tax. Somewhere your mind store it. That's all I say. Whenever, because in examination, when I see a question on 35 AD, my mind should open out to one fact. Concessional region, no problem. You cannot claim it. Optional tax regime, when they ask you to work out the tax, you also have to work out adjusted total income and AMT. Somewhere we will write and keep in your notebook itself. Remember, there is something known as section 115A JC, where I need to work out alternative minimum tax, where I need to work out alternative. Later only we are going to work out. But put it in your mind that whenever I am going to talk about one other section where this is going to be vigilant, so that you are very clear. Somewhere put it in your mind that alternative minimum tax needs to be worked out when we are working out 35 AD. If we are claiming 35 AD, concessional tax regime, we don't claim 35 AD, so no AMT. Whereas normal tax regime, optional tax regime, we might be claiming, we might be working out. Okay. Amortization, don't worry about any amortization from the examination perspective except this. Family planning expenditure is available only for Indian companies. Even if they give, for us, company is not an and we don't have assessment of companies. So we should be very careful. No other persons can claim it. Okay. Other deductions, group insurance are allowed. Okay. Provident fund, everything we will speak about, these things are allowed. Bad debts is allowed. STT, CTT is allowed only if it is for stock. Insurance premium is allowed only if it is stock. Again, most important to remember, because in examination they will test you wantedly saying capital revenue, that is only for Indian companies. Any other assessee cannot claim this, be it revenue or capital expenditure for promotion of family planning. Am I clear to you? About Provident Fund, I will speak in 43B. About Provident Fund, I will speak in 43B. And then comes the general deductions. Then comes the general deduction. Okay, it should not be a capital. It should not be personal. It should be incurred during the previous year. In this, please remember these things. Penalties are not allowed. Anything paid for violation of law, not allowed. CSR expenditure, company is not there, but still remember. Advertisement in the political party, even political donations are not allowed. So is advertisement in the publication of political party. For this, you can claim 80 GGC. For this, you can claim 80 GGC, provided you are following the optional tax regime. Provided you are following the advertisement in the brochures of the political party, in the souvenirs of the political party, is not allowed while computing PGBP, but later you can claim 80 GGC, provided you are following optional tax regime. Provided you are following optional tax regime. Some expenditures are business expenditure, entertainment, festive occasion, legal expenses, interest after putting the asset into use. Some are not expenditures, proprietor's salary, donation, whatever may be the donation, penalty, interest up to the date of putting it into use are not allowed as deduction. This is 30 to 37. This is 30 to 37. Are you clear? Are you clear? Okay, right? So remember this. Okay, in this, the most important is 32. Okay, the most important is 32, depreciation. We'll take a 5-minute break, come back and start. Entering the most important part of our examination questions. Entering the, because adjustments revolve much around this. Okay, that is the disallowance provision under various sections. First, TDS default. Default means something which is not done. Something, the term default here means something which has to be done has not been done. Okay. Very slowly, I want you to understand lot of things with regard to this TDS default. Okay. Step 1, verify whether tax has to be deducted. Step 1, verify first tax has to be deducted. Why I am saying this, verify tax has to be deducted. Payment made to a professional 40,000 without deducting tax at source. Though I assure you, I will take TDS. But there the threshold itself is 50,000. Threshold itself is 50,000. So tax need not be deducted. dividend of 5,000. Tax need not be deducted. First step, before going into the disallowance, see if somewhere in the question has they given some hint. Okay, verify whether tax has to be deducted. This has two parts. One, threshold. Second thing, please remember, hijack 194H I J A C. H stands for commission and brokerage. I stands for rent. J stands for professionals. A stands for interest. C for contract. I will explain again in tedious. In these 5 sections, it is not applicable for an individual whose turnover has not exceeded 1 crore or gross receipt has not exceeded 50 lakhs in the last year. I will again tell you these things, but now you should consolidate and read it. That's why I'm saying also check for threshold, also check for applicability. Whether this person has to deduct tax at source, the question starts in the financial year 25-26 or 24-25. Mr. A's turnover was 95 lakhs. And one of the adjustments says he has not deducted tax at source on a contract. He did not deduct. You should not disallow 30% in that case. You should not have the disallowance provision. So, read the question to understand whether there is a threshold limitation and whether it is applicable. TDS is applicable at the first instant. Are you all understanding? Are you all understanding? Okay. Look for threshold limitation and applicability. Look for threshold limitation and applicability. Step 2. If applicable, then check for these things. Step 2. If you are clear it is applicable, threshold has exceeded, then check for these things. Deduction, it should be before 31/3/26. Before the end of the financial year, I should have deducted. Remittance before due date, as I told you, majority of the time October, 31st October. Deduction should be within the due date, or remittance, deduction should be within the same financial year and remittance should be within the due dates. Then come to step 3. If not, then what is disallowed is 30% of such expenditure is disallowed if the receiver is a resident. 100% of such expenditure is disallowed if the receiver is non-resident. Are you clear? 3 things. First, check whether it is applicable. Applicable by meaning last year's turnover should have exceeded 1 crore or last year's income or gross receipt should have exceeded 50 lakhs. And the payment made should have exceeded the threshold. Then comes, if it is applicable, then check whether deduction is made in the same financial year before 31/3/26. That is, this is before 25/26. In the same year, deduction is made and remittance is made within due date. If not, if the deduction is not made or remittance is not made, okay, that is known as a default. Disallowances 30% of the expenditure if the receiver is a resident and 100% of such expenditure if the receiver is non-resident. Verify whether taxes has to be deducted. Applicable when it is applicable. Only we are only dealing with individuals. Our examination deals only with individuals. Our last year's turnover should have exceeded 1 crore or gross receipt should have exceeded 50 lakhs. Then only we are liable to deduct tax at source in some sections. Once it is applicable, look for threshold for that particular section, which we will do in 190 when we revise TDS. Am I clear? Okay. And what happens if there is a default? What is that disallowance provision? I want you to remember this special point. I want you to remember the special point. If an examiner wants you what is meant by tough paper, a provision which is not very popular is questioned, is known as a tough paper. So sometimes the examiner wants to test you on something like this. Default has happened in 24-25. Rectification of the default happens in 25-26. Default is not happening in 25-26. Default is already happened in 24-25. Audit fees of 1 lakh for the financial year 24-25 was paid without deducting tax at source. That is a disallowance for the financial year 24-25. Knowing the mistake, this year the tax is deducted and remitted. So this year what has taken place is default rectified. So whatever was disallowed in the last year needs to be allowed this year. Needs to be allowed this year. I am repeating, this tedious type of adjustment question, read it once or twice, especially if the words 24-25, preceding financial year, last financial year, assessing officer disallowed. In that case, they are not talking about disallowance of the current year. They are talking about allowing it in the current year. Finally, we should put less. Last year disallowed, this year allowed. And 30% should only be allowed. Not the entire 1 lakh. Last year, they would have only disallowed 30,000. This year, we should allow that 30,000. So, as a special point, you should check. Any adjustment, read it once or twice to understand that adjustment. As soon as you receive the question paper and you have 15 minutes of reading time, I want you to spend that reading time on that 14-mark question so that you are very clear about what it is, which year, what, okay, so that the answer can be quickly done. Am I clear to you? Am I clear to you? Okay, this is something which is very important. Can I? So TDS default is one of the most popular thing where 30% or 100%. Please remember the default rectification provision where any expenditure was disallowed earlier. So by means of earlier, I mean in the preceding financial year. You should read that sentence carefully. Due to non-deduction, now tax is deducted and remitted. Then in the year in which it is remitted, the disallowed portion can be claimed. The disallowed portion can be claimed. Are you clear? Are you clear how to look at TDS as a separate provision? Now, all type of income tax are disallowed. When I say all type of income tax, I mean income tax, provision for income tax, advance tax, interest under income tax. Now you know, since you have studied, now you are revising 234B, 234C, 234A, late filing of return, advance tax not paid, short payment of all these type of interest are disallowed. In this, I want to talk. Yesterday, Harita also texted me a doubt on this. Tax on perquisites. Tax on perquisite. I am providing some perquisite to my employee. Employer provides some perquisite. Perquisite means non-monetary, which are valued. We know RFA how to value it, motor car how to value it, etc. Okay, which are valued, on which there is a tax. Tax on perquisites, on which there is a tax, which is borne by the employer. Understand this. This is an income tax borne by the employee, borne by the employer. Yesterday, Harita was asking me, should I treat it like a perquisite in the hands of the employee? Okay, because it is a monetary obligation of the employee borne by employer. The answer in this case alone is no. Section 40A, because normally if an expenditure is allowed in the hands of the employer, it is taxable in the hands of the employee. An expenditure, professional tax of employee paid by employer, allowed in the hands of the employer, you will tax it as a perquisite in the hands of the employee. You're clear? Okay. Similarly, any other expenditure of employer, electricity expenses of the employer's residence borne by the employee's residence borne by the employer, allowed in the hands of the employer, taxable. But here alone, it is not allowed in the hands of the employer itself. So it is not taxable in the hands of the employer, pays the tax for this. Even though he has borne the tax on perquisite of an employee, had it been allowed in his hands, it would have been taxable in the hands of the employee. But the law has said in section 48 itself that no, it is not allowed in the hands of the employee. Are you clear? Are you understanding? Are you all clear? Okay, so this is something. So all type of income taxes are disallowed. All type of income taxes are disallowed in the hands of the employer. Now comes the next thing, which is also popular, that is 40A subsection 2, payment to relative. What do we want? We want only two things: fair market value, actual paid. If this is greater, then excess is disallowed. If the amount paid is more than fair market value, less than, don't worry. Less than fair market value, don't worry. If the amount paid is more than the fair market value, then the excess alone is disallowed. Then the excess alone is disallowed. Is the class clear? Are you following? Excess alone is disallowed. This is payment to relative. Again, an important section. And all the more important section comes now, for which I gave you the introduction itself. Okay. Shall I? 40A subsection 3. My organization works for 300 days. My organization works for 300 days. Daily I pay 10,000 to Harita by cash. Remember, no disallowance. I will start now. On a single day, to a particular person, if the payment exceeds 10 up to 10,000, yes. Don't get confused in examination. Exactly 10,000. Are you what? In excess of 10,000 only, you should not pay. Up to 10,000, you can pay. On a single day, to a particular person, if the payment exceeds 10,000, then the law says the whole of such payment made is disallowed, not the excess allowed. It is the whole of such payment is disallowed. On a day, I pay to Harita morning 6,000, evening 6,000. Entire 12,000 disallowed. Not single payment. It is single day. On a single day, to a particular person, I pay 10,000 to Harita, 10,000 to Harita's father, 10,000 to Harita's mother, no problem. No disallowance, because to a particular person I am not paying. If I am paying to one person on one day in excess of 10,000, the whole of such payment, the entire payment is disallowed. Okay, entire payment is disallowed. And if it is for asset, I have already told you. But there are some exceptions. Exceptions are two ways. Exception in the law, exception in the rules. Exception in the law, transport operator, the limit is 35,000 instead of 10,000. Exception in the rules, government, bank, agricultural, fisherman, payment in a village where there is no banking facility, on retirement or resignation, up to 15,000. Up to 15,000. Are you clear? Are you clear? Okay. Suppose expenditure is already recorded. Very tricky provision. Expenditure is not this year, last year's expenditure. This year I paid by cash. Then whatever is the expenditure will now be treated as income. Because there is nothing to disallow. The law says where any expenditure is accounted on mercantile basis, payment is made this year otherwise than by approved mode. Okay, repeating. Where expenditure is accounted on mercantile basis, payment is made in the later year and the payment violates 40A3. In the year of payment, the whole amount will be treated as income. The whole amount is treated as income. Clear? Clear? Okay. 48.3 sure short question is coming either as part of capital or as part of it. When we do the questions, you will understand. Provision for gratuity is disallowed. Payment to unrecognized funds are disallowed. Are you clear? Okay. These are all disallowance provision. All are important. TDS default, income tax, payment to relatives, 48.3. Just read through fast. We will go to the other. Shall I? Shall I? Now, 43B. The next important, again questionable area is 43B. More question come from bonus, commission, interest, okay, PF. Any tax, cess, duty. That's what initially I told. Municipal taxes will be coming under 43B. Any tax, cess, duty. Employers' contribution to PF. Payment to Indian Railways for usage of their assets. Bonus or commission, leave encashment, interest. 6 statutory duties. Any taxes, statutory payment, taxes duty, employer's contribution to provident fund, payment to Indian Railways, bonus or commission, leave encashment, interest. Remember, all payment to government are not statutory. Electricity paid late, allowed. It is not a statutory payment. Statutory payment is any taxes duty only. Okay. If they are due on the end of the year, it should be paid before due date of filing return. Where it is not paid, the unpaid amount will be disallowed in the year of incurrence. However, the same will be allowed in the year in which actually it is paid. Am I clear to you? Am I clear to you? Okay. And the important provision is 43BH. I'll come to employer-employee contribution later. 43BH, which covers micro and small enterprises. Please write down this sentence. What is micro and small enterprises? Please write down this sentence. Okay. Micro means Investment up to 1 crore, turnover up to 5 crores. Small means 1 to 10, 5 to 50. Am I clear? Am I clear? Okay. Because sometime in examination, once in final, they just gave this, the enterprise's turnover is less than 1 crore. People have to understand that it is I'm not expecting like that, but I want you to be safe. Okay. So only I have given this. Okay. Recently in final, they never gave it as a small enterprise. They gave the turnover and the asset value, and we have to understand this as a small enterprise. That's how it went. That's why I am very particular. You know this. Now let me start with the provision of. So this is not for medium enterprises. This provision is because the law is known as MSME law, micro, small, medium. But this 43BH is not applicable for medium enterprises. It is only for micro and small enterprises, medium not covered. Where amount is outstanding at the end of the year. Okay, where amount is outstanding at the end of the year, then the same will be allowed. Where there is no agreement, it should be paid within 15 days. Where there is agreement, either agreed days or 45 days from the date of transaction, whichever is earlier. Whichever is earlier. Once more repeating. This provision is applicable only for micro and small enterprises where any amount is outstanding at the end of the year. When will it be allowed? It depends upon whether there is agreement or not. If there is agreement and the agreement says 50 days, no sir, you should have paid before 45. 45 is the maximum. Agreement says 35. Agreed days or 45 days, whichever is earlier. If there is no agreement, within 15 days. Within 15 days. Are you clear? Okay. Transaction date is 1st March 26. No agreement. Payment is made on 30th March 26. Is it allowed? in the financial year 25-26? Is it allowed? Krishna, is it allowed?
Yes, sir.
Darshini, is it allowed?
Oh, no agreement, not allowed, sir. Sorry.
Not allowed.
Yes, sir, it is not allowed.
Not allowed. Enna Priyanka? Not allowed. Okay. So I want one point you are missing it is where any amount is outstanding at the end of the year, then the provision A. Which year you will allow? There is a default. I don't deny that. Default is also there in 25-26. Rectification is also there in 25-26. Date of transaction 1/3/26. Date of payment 33/26. No agreement. I accept. But it is rectified also. I accept there was a default, and it is this provision. First point to understand is this provision is applicable only if it is outstanding as on 31st March. Otherwise, this provision itself is not applicable, my dear friends. That is the question of disallowance. That is the question of disallowance. So, suppose if the payment date is 2/4/26, I accept it is disallowed because 31/3/26 it was outstanding and it is rectified in the financial year 26-27. So the first point to understand is it should have been outstanding as on 31/3/26. Then only you should proceed. If it is paid within the same year, even the transaction might be on 1/4/25, settled on 31/3/26. After 364 days they have settled. Whether agreement is there or not, there is a violation, but no disallowance. There is a violation, but no disallowance because the amount is not outstanding as on 31/3/26. The amount is not outstanding as on 31/3/26. First thing to see is this point, whether it is outstanding as on 31/3/26.
Last year or the current year pay.
Transaction 1/4/25, current year transaction paid on 31/3/26. Both the transaction and the date of payment is current year. I'll come to your question little later. Okay. First thing to see is it outstanding as on 31/3/26, even to worry about this particular provision. Otherwise, don't worry. Am I clear to you, Krishna, Raja?
Yes, sir. Now, the date kappa padich.
No issues. Where any amount is outstanding at the end of the year, then the same will be allowed only if it is paid as follows within 15 or 45 days. Where it is not paid, it is disallowed and allowed in the year of payment. Like how I write for TDS, I'm writing for 43 BHX also. Step 1, check whether it is outstanding on 31/3/26, end of the year. Please understand, step 1 is to check whether it is outstanding as on 31/3/26. Step 2, whether there is default. So after that, check whether there is a default. Then only comes disallowance provision. then only comes disallowance provision. Check whether it is outstanding. Once you are sure it's outstanding, see the date of payment and see whether there is a default. It is not paid within 45 days, etc. Okay, and then disallowance. Two special points I want you to remember. If it is medium enterprise, provision is not applicable. The 43BH itself is not applicable. If it is medium enterprise, 43BH itself is not applicable. And now to Rama Abhirami's question also. Second special point you see is whether 25-26 is rectification year. Last year I had purchased from an MSME in March 25. Payment is made in October 26. That's how they are good. Now our mind should think this would have been disallowed last year because it was not paid within 15 or 45 days, whatever it is. This year what has happened is I have rectified. So last year whatever I have disallowed, this year I should deduct it. This year I should deduct it. Again repeating, as like TDS, here also one more point to check is whether this is a year of rectification. In the preceding year, payment is not paid within due date. They would not say that it is disallowed. We all know it should be disallowed. They would have disallowed that amount. In the current year, the payment is made. So since this is the year of payment, you should allow it. You should allow it. Pakka clear, all of us? Pakka clear? So this is how
Yes, sir.
we should check 43BH, check outstanding, check default, and then disallow. Or if the payment is made in this year, immediately our mind should relate, oh, last year whether there is a disallowance, we should check. If payment is made between this year, you should check that. Am I clear to you? Okay, friends. So this is the 43BH provision. Till today, I have not seen this question at the inter level, but I always want you to be aware and also to be safe. Remember, employees' contribution to Provident Fund should be remitted within the due date of the respective law, not within the due date of filing return, within 15th of the next month. Otherwise, it will be treated as income. Just read it once. Till today, I have not seen the question. Next year, in the new law, there are a lot of amendments in this. Okay, so as of now, read and keep. Employer's contribution, you know, it should be before the due date of filing returns. Otherwise, it will be disallowed. Otherwise, it will be disallowed. Is the class clear? Is the class clear? 43B is a sure question, and almost recent times 43BH is being repeatedly asked. When we do the questions, we will understand it. Deemed income. This is the next section. This is the next section for income. Income is spoken in two sections, section 28 and 41. Deemed income. Any expenses, losses, deduction claimed earlier, which is allowed. Now, if it is recovered, it will be treated as income. Any creditors write back, loan return, working capital loan write back, all these things will be treated as income. Am I clear to you? I want to speak about bad debts alone, okay, for some time. Okay, okay. Bad debts alone, shall I take over, friends? Bad debts alone, I want to speak. Example 1. Bad debts claimed and allowed 1 lakh. Recovered 40,000. Now, what is the income, my dear friends? What is the income? Okay. Bad debts recovered is 40,000, deemed income, section 41. Okay. Take this example first. I want to go slow, so I am taking time. Okay. Example 2. Bad debts claimed 1 lakh. Bad debts allowed 50,000. Recovered 40,000. Bad debts claimed. How much did I claim? 1 lakh. How much they allowed? 50,000. Now, what is still outstanding? 50,000. Now I get 40,000. Now I get 40,000. Income is nil. Always, whatever I get, I will apportion towards that which is not allowed. That which is not allowed, I will always apportion it towards that which is not allowed. Okay. Okay. Example 3. Bad debts claimed 1 lakh. Bad debts allowed 50,000. recovered 70,000. Can you tell me what is income? Very good. Income is
20,000.
only 20,000. Up to 50,000. This goes to the disallowed portion. Over and above that will only be treated as recovered. You understood this? Okay, this is important. Remember, very rarely, but still, it can come in that MCQ styles. What is the income part of it? That is bad debts recovered, creditors returned back, any expenditure which they are giving back, director gave back their fees. Okay, anything like that will be treated as deemed income. Okay, okay. And then comes the most interesting mandatory audit provision when books has to be audited. In the case of profession, gross receipt. Why profession uses the word gross receipt? Because they account on cash basis. So they use the word gross receipt. In the case of business, gross turnover exceeds 1 crore. In the case of business, gross turnover exceeds 1 crore. Okay. And then comes the most important provision. Very slowly understand this, because here and the next, both I will tell you the difference also. Where receipt otherwise than by approved modes does not exceed 5% of 5% of, I never said only revenue receipt, only both revenue receipt. It can be sale of goods, sale of asset. It can be sale of investment, sale of scrap. Anything. Revenue receipt plus capital receipt is equal to total receipt. If the receipt otherwise than by approved mode does not exceed 5%. Similarly, payment otherwise does not exceed 5%. The limit becomes 10 crores instead of 1 crore. Due date becomes 31st October if you are a tax audit case. If you are a tax audit, this is known as tax audit. Mandatory audit is known as tax audit. Am I clear? Can I go for presumptive computation? 3 provisions are there, and this is the most important provision. No, other 2 are rarely tested, but this is tested. 44 AD, applicable if the turnover does not exceed 3 crores. However, 2 crores. However, if the 95% of the turnover, here the difference is, now I am explaining you. Here it is total receipt. There it is turnover. Difference is there. Difference is there. Okay. Is through approved modes. You can go up to 3 crores. Okay. Okay. Shall I, friends? Listen. Example 1, example 2, example 3. Okay. Listening only. Okay. 2.80 crores. 2.80 crores. I say by cash, it is 10 crores or 10 lakhs. Okay. By account pay check, 2.70. Can I go for 44 AD? Can I go for 44 AD? Can I go for 44 AD? Up to 3 crores. So this is okay. It has not exceeded 5%. It has not exceeded 5%. So I can go for 44 AD. Okay. 2.80 crores. 0.40 crores. 40 lakhs. Can I go for it? Can I go for it? No, I cannot go for 44 AD because it has exceeded 5%. It has exceeded 5%. Very important. 2.80, 0.10, 2.50, which means another 20 lakhs not yet received. Outstanding. Let me be very clear here. Let me be very clear here. My turnover is 2 crore 80 lakhs. I have received only 2 crore 60 lakhs. Out of that, 10 lakhs is by cash, 2 crore 50 lakhs is by account pay check. Now tell me. Should we take the denominator? Here is what? I want to make it clear. Denominator is 2.8. And the 20 will be added to here. Friends, received through approved modes should be 95%. Not received and not received through approved modes will be added here. Very rare, small nuance you have to understand. Received through approved modes should be 95%. Sir, I have not received. Sir, I am very clear. 95% of your turnover should be received through approved modes. 95% of your turnover should be received through approved modes. So, have you received it? Have you received it? No. Friends, this is also a case where I cannot go for tax. I cannot go for 44 AD. 44 AD is applicable only if you have received 95% of your turnover through approved mode. Sir, something is outstanding, but I am sure I will receive it by approved modes. I am not ready to take that assumption. Is the class clear? I am not ready to take that assumption. Please write these 3 examples and keep it.
Outstanding at the end of the year, with no agreement, the date such example சொல்றீங்க that will be disclosed.
Yeah, sure. I'll do it. May I? May I? May I? So this you remember. Now the income. 6% of the turnover through approved modes. 8% otherwise than by approved modes plus not received also, outstanding also. 8% will be for the outstanding portion also. 8% will be for the outstanding. Professionals, gross is 50 lakhs and the same condition 75 lakhs. 50% of gross reserve. 50% of gross reserve. Generally, these people never have outstandings because they account on cash basis. So it will not. Very rarely I saw a question. That's why. Goods transport operator should not own more than 10 vehicles, not at the beginning or at the end, at any time during the previous year. Should not own more than 10 vehicles at any time during the previous year. HCV means 12,000 kgs or more. HCV 1 rupee per kg. Other than HCV, 7,500. Are you understanding this? All expenses are deemed to have been allowed, and even unabsorbed depreciation is deemed to have been allowed. We saw in set of chapter. Okay, even that unabsorbed depreciation, you cannot claim it. Brought forward unabsorbed depreciation. Only brought forward business loss can be claimed. Brought forward unabsorbed depreciation cannot be claimed. Where assessee wants to declare a lesser income, maintain books and get them audited, be here in the scheme for 5 years, and the scheme is not applicable for companies and LLPs. Are you clear? There is a fifth point I am adding now, which we will study later also in the revision, but I'm just marking it here so that you can be clear. 44 AD and 44 ADA advance tax, only last installment needs to be paid. You understand? If you recollect, in advance tax we will read. If assessee is following presumptive computation under 44 AD and ADA, not AE, in AD and ADA, he need not pay the first 3 installments of advance tax. It is sufficient if he pays the last installment of advance tax. That is March 15th installment. All of us clear? Okay. So this also, just remember, though it has nothing to do with this chapter, but when we know consolidated, no, we will understand, oh, how to link this to that. That's what it is. Okay. So these are all about PGBP 1 part. I will now go to 40B. 40B, that is partners' remuneration and interest. It can be paid provided it is mentioned in the deed. The deed should mention it. Okay. Authorized by the deed, either as per law, as per deed, whichever is less. Interest on capital is 12% per annum. Interest on capital is, it can be paid to any partner, even a non-working partner, because they have contributed capital, every partner. So it is as per law, as per deed, whatever it is. Remuneration is based on book profit. Book profit is nothing but add back all expenditure, disallowed expenditure, reduce depreciation, reduce everything, reduce even interest on capital, that 12%, that is up to 6 lakhs, 90% of book profit, or 3 lakh, whichever is higher. More than that, 60%. And this is the point which I want to focus. The allowed remuneration and interest is taxable in the hands of the partners under the head business or profession. The allowed remuneration and interest is taxable in the hands of the partner under the head business or profession. Okay. So let me take an example that, okay, Harita is a partner in a firm and we are working out the total income of Harita. She received 15% interest on capital, 1,50,000 from the firm. When I am computing the income of Harita, I will take 1,20,000 only as income because 3% obviously would have been disallowed in the hands of the firm. Disallowed in the hands of the firm. Even though she has received 150, one person's expenditure is only another person's income. Firm's expenditure, they will not be 150, will only be 120. That can only be Harita's income. So 120 will be taken under PGBP. Under PGBP. Why I am again and again stressing is, if there is any business loss brought forward, it can be adjusted against this. Brought forward business loss can be adjusted only against business income, not against IFOS. If it is taxable in IFOS, I cannot adjust, but this is taxable under PGBP. This is taxable under PGBP. Same way, a remuneration also is taxable under PGBP. In the hands of the partners, the allowed, whatever is allowed in the hands of the firm, will be taxable in the hands of the partners under PGBP. Are you clear? Are you clear? Okay, right. I'll complete one more part and then take the break. Okay. Okay, are you clear? Related to this, some parts I want to complete. The first one is exemption under section 10AA. This is for a unit located in special economic zone. This is for export profit. Export profit is total profit into export turnover by total turnover. That is proportionately, I find it out. I find it out proportionately. Before AMT, you would have, after rates of taxation, after deduction, you will have this in your notebook. After deductions chapter, you will have this in your notebook. Okay. Export profit is total profit into ET by TT. Export turnover is money brought into India in convertible foreign exchange within 6 years, 6 months and money retained. Export turnover and total turnover will not include freight insurance. 100% of the profit can be claimed if it is first 5 years, 50% next 5 years and last 50%. This cannot be claimed under concessional tax regime. And now you remember, this is also an AMT related provision. Even though you are in optional tax regime, when you are, I can see it here, okay, you will add back these things while computing AMT and compute the AMT at 18.5%. Don't worry about AMT right now. Now you understand 10AA alone. Okay, this is for in the examination question. Assessee has a unit in ACZ. You immediately be aware we are speaking about 10AA. We are speaking about 10AA. Am I clear to you? Am I clear to you? Okay, take the break, my dear friends. Okay, take the break. We will come back and start doing solutions. We are going into practical approach now. We are starting from page number 75. Starting. Mr. Raja, a proprietor, you can see the screen, that is sufficient for MCQs. Mr. Raja, a proprietor, commenced the business of a new 3-star hotel in Mumbai. So it is a specified business. 2-star or above category is a specified. His total investment 7.58 crores, out of which 1.58 crores is land. So that cannot be claimed, remaining 6. 4.7 crore was used for constructing hotel and 1.3 for furniture, both allowed. He wants to avail the benefit of 35 AD. Somewhere they will say 35 AD or specified business, as he satisfied all the condition and shifting out of default tax. His profit and gain is 50 lakhs before claiming 35 AD. So he will end up with a loss of 5.5. 50 lakhs minus 6 crores, 5.5. He wants to file the return after due date. 31st October is the due date. How much deduction and the loss that can be carried forward? He can claim 6 crores of deduction, but he cannot carry forward any loss. Which is the correct answer? He can claim a deduction of 6 crores from his business income, but cannot carry forward any business loss. Okay, as the return is not filed within the due date of returns. Mr. XX, a retailer, acquired furniture for rupees 10,000 in cash on 15th May for 15,000 and 20,000 by a bearer check and account payee check. What is the depreciation? What is the rate for furniture? 10%. What is the answer? 2,000. Any other answer? I was on the top of my voice shouting, 10,000 is not a disallowance. More than 10,000 only is a exceeding 10,000. Exceeding 10,000. Okay, is only the disallowance. So this 10,000 I can record. This 20 I can record. This. So 30,000 into 10%, 3,000. Mr. C, aged 35 years, is a working partner of a firm with equal profit sharing. The firm paid remuneration to Mr. B, C, and D 2 lakh each. The firm paid interest on capital 120 in total to all three partners within 12%. The firm had a loss of 1,12,000 after debiting remuneration and interest. Remuneration and is authorized by the debt. You being the chartered accountant of Mr. C in the process of computing what is his taxable remuneration. Minus 112 plus 6 lakhs, 2 lakhs each. Interest on capital need not be added. It is already reduced. Only if there is a disallowance, you should add back. So what is the book profit you are getting? 4,78,000 into 90% on the first 6 lakhs into 90%. How much? 4,32,000. C's share is equal to, because they are asking what is C's remuneration. This is the computation. Online students, are you following? Do you? Please wait. We just started, don't worry. Okay. Minus 120 plus 6 lakh 488 up to 90% can be paid. 439 out of this 1/3 pertains to C. You don't worry, we'll again do it. These questions will repeat. Don't worry. Shall we? Mr. Kumar is engaged in wholesale business of cloth and speculative business, discontinued its operation on 1910 and 39. See, cloth business can be set off against anything else. Speculation loss only against speculation. The cloth business loss is 8,000 and speculative 40. Out of bad debts of 1 lakh that were claimed by Mr. Kumar in respect of a debtor, 60,000 was allowed earlier. Now Mr. Kumar recovered 68,000. Now Mr. Kumar recovered 68,000. How much becomes taxable? 28,000. How much amount will be taxable in the hands of Mr. Kumar? This 28,000 minus 8,000 of normal business loss, 20,000. Repeating, I claimed 1 lakh of bad debts. Only 60,000 was allowed, which means the remaining 40,000 not allowed. It's still due. I recovered 68,000. 40 goes towards due. Remaining 28 is taxable. I can only claim cloth business loss. I cannot claim speculation business loss. should be speculative. Hence, taxable portion is 20 lakhs. Am I clear? 20,000. MCQ 5 we have answered. I'm going to 6. Very interesting question. Very interesting question. Read an answer. Take your time. In respect of what would be, how much deduction would be available? 5 lakhs. Krishna, Darshini, Ilakya.
Sir, 5 lakhs, sir.
கண்டிப்பா தப்புதான். Okay. Date of purchase, date of payment. Is this allowed 5 lakhs? Yes. Even though there is a default, it is paid within the due date. So it is allowed. It is allowed. Okay. Is there 17th March, no agreement? We should have paid within 15 days. Is it allowed?
No.
No, not allowed.
Median enterprise.
You have not studied this word, right? Okay, 13 lakhs. Remember, the third is a medium enterprise. The third is a medium enterprise. The provision itself is not applicable. The provision itself is not applicable. So, payment to Mr. A, micro enterprise, is within the same year, allowed even if there is a delay. Okay. Mr. A, median enterprise is not covered, totally allowed. Payment to B is not allowed. Am I clear to you? Okay. Am I clear to you, friends? Okay. One of the questions which Rama Abhirami asked me is to 43BH to give an example of where there is agreement or no agreement. How to measure this? It is always T plus 15, T plus 45. T stands for transaction date. Leave that and go for 15 days or 45 days if the agreement is there. First, I will give you a no agreement example. So, transaction date is, let us take 20th March 26. Leave 20th. Starting from 21, if I take it, 10 days in March. Okay. 11 days in March. 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. 11 days in March plus 4 days in April. So April 4th is the Okay. Maximum limit is April 4th. T plus 15. Leave the transaction date from there, from the next date within 15 days. Okay. If there is an agreement to pay within 35 days and the transaction date is 20th March, the maximum day will be 11 days in March, 30 days in April, makes it 41, plus 4th May is the due date. 4th May is the due date. 11 days, 35 days is the agreement days, 35 or 45, whichever is less. So 35 days is leaving the transaction date, go for computation. 11 plus 30, 41 plus 4 days of May. Am I clear? Okay. If agreement date is 50 days, I'm only maximum can be 45 days. Maximum can only be 45 days. If my transaction date is 10th March, or let's take an odd date and see. If my transaction date is 17th March, maximum will be in March. I will have another 14 days. In March, I will have another 14 days. In April, 30. So makes it 44 plus 1 day in May. So maximum is 1st May.
So second case only 35 days.
Uh,
So 20th March அப்புறத்துல 35.
20th விட்டுரு.
So 11 days வந்து March.
ஆமாம்.
அப்போ 24 days வந்து April.
நான் தப்பா calculate பண்ணிட்டேன். Sorry. நான் 45 days calculate பண்ணிட்டேன். Sorry. This should be 24th April. Yeah. 11 days in March plus 24 days in April. Next question we have worked out.
இந்த மூணு கேஸ்லயும் outstanding as of 31st.
இது yeah that's why payment date கொடுத்திருக்காங்களே. They have given payment date, no? Date of payment 29th. இது first caseல not outstanding. So only it's allowed.
Date of payment வச்சு பார்க்கணுமா இல்ல 30 days?
Date of payment வச்சு தான் பார்க்கணும்.
Outstanding.
First step 1, check whether it is outstanding as on 31/3. Step 2, check there is a default. So here there is a default. Here it is not applicable. Provision itself is not. Page number 78, case scenario 2. Mr. X has set up a manufacturing unit in Chittoor, Andhra Pradesh. During the previous year, he purchased the following: 7th June 24, plant and machinery X. 25th July 24, 14th Jan 25, and the current year. He paid the following professional fees: 35,000 to Mr. A, B, and C on 10th September, credited in the books on the same date. Okay, to discuss some legal matters, and it has not exceeded threshold. 50,000 is the threshold under 1. The net profit computation of business for the previous year is 10.2 crores. Based on the facts of the scenario, choose the appropriate answer. What is the depreciation in respect of plant and machinery? Why? Allowable as a deduction while computing this year's income. Plant and machinery, why is purchased in the last year? Wait. In the second half of the last year. So last year, I would have only taken 10% additional. எப்படி compute பண்ணும்? Okay. First, okay, write down case question 1 for plant and machinery Y, 5 lakh minus 17.5%. Last year I would have claimed 7.5% normal depreciation and 10% additional depreciation. So 5 lakh minus, so that will give me the opening balance of that plant and machinery. How much? 4,12,500. Current year depreciation will be 4,12,500 into 15% plus 5 lakh into 10%. The balance 10% of additional depreciation. 4,12,500 into 15% plus 5 lakh into 10%. Okay. Opening balance of machine Y after providing last year 7.5% normal and 10% additional will be 4,12,500. On that, I will claim 15% normal and 10% additional. What shall be the total amount of depreciation allowable while computing PGBP? We need to work out little lengthy. Okay, for 24-25. Okay, have two columns, plant and machinery, furniture. Machine X 1475,340. Machine Y 5 lakhs. Both are plant and machinery. 1475,340 and 5 lakhs. Furniture, furniture 7,65,400. So first to provide last year depreciation. Okay, for this you will provide 20 plus 15, 35%. For this you have already computed 17.5%. And for furniture 10%. So that you will get the opening WDV. From there, current year depreciation. Current year I have purchased the machine set for 8 lakhs. Patiently do it and tell me the answer. Patiently do it and tell me the answer. What's your answer? Depreciation is the answer. Six lakh 4,607. One of the answers. Anybody online? Can you give me the answer? Is my screen visible? Yeah, that's what I also get. Opening WDV of plant and machinery is 1371 471. A new machinery is purchased. All is eligible for 15% depreciation. Additional machinery for new machine is 20% and last year Y machine is 10%. For furniture, opening WDV and depreciation 10%. Mr. X wanted to know from you whether tax is required to be deducted on the professional fees of Mr. A, B, and C. No, since it has not exceeded threshold. Threshold is 50,000. No, it has not exceeded threshold. Threshold is 50,000. Shall we? Again, a good question. A, B, C, and Co. is a firm engaged in the business of sale of footwear. The partnership firm consists of three partners, A, B, and C. A and B are working partner and C is a sleeping partner. The firm is liable for tax audit. It has a book profit of 11,50,000. They have given the book profit itself. You need not compute, they have given. Following payments are made. Remuneration to A and B, 32,000 each partner. This would have been fully disallowed. Mr. C is a sleeping partner. So non-working partner, they cannot claim any remuneration. This is fully disallowed. Interest on capital, 19.5% to A and B, each partner, and C, 10,540. The firm has the following brought forward loss: business loss, unabsorbed depreciation, and LTCL. First, what amount of interest is allowable as deduction in the hands of the firm while computing PGBP? Tell me, it is 18,500 to each partner, 19.5. Option B, 22,770. Okay. No,
Each one add பண்ணி.
C க்கு add பண்ணணும். Yeah, C is also eligible for 3210. For A and B, 18,500 divided by 19.5, 2270, and C, total 3210. What is the amount of remuneration not allowable as deduction in the hands of the firm while computing PGBP? Okay. 1,20,000, because C is not a working partner. But before that, we have to check A and B whether it is within the limit. Book profit 11,50,000. Please write down. Book profit 11,50,000. The 40B computation will be, okay, 5,50,000 into 60% plus 5,40,000. On the first 6 lakh, 90%. So that will become 5,40,000. And the remaining 5,50,000 into 60%. 5,50,000 into 60% plus 5,40,000. How much? 8 lakh? 8,70,000. Actual remuneration paid is 32,000 into 2 into 12. So this is allowed, only this 120 is disallowed. This is allowed, only this 120 is disallowed. My dear friends, okay, salary is not payable to non-working partner, hence it is fully divided. Remuneration to A and B are within limits. What is the due date of filing return for Mr. A and C? For everyone, 31st October. For everyone, it is 31st October, because if you are a partner of a firm which is subjected to audit, because the question itself says firm is audited, so 31st October. In case of a firm which is subjected to audit, 31st October. What would be the income under PGBP? Can we do it? Okay, friends, write down 11,50,000 book profit, 11,50,000. Book profit 11,50,000. Less allowed remuneration 32,000 into 2 into 12. 32, 7 lakh? 7,68,000. Okay. How much it comes to?
3,82.
How much?
3,82.
Minus business loss and unabsorbed depreciation. Minus business loss and unabsorbed depreciation. Oh, okay. Minus business loss. Minus business loss. 2678 and 105,670. Remember, book profit is after allowing unabsorbed depreciation. Remember, book profit is after allowing unabsorbed depreciation. Okay, we just saw when we are reading the theory also. Okay, book profit is after allowing unabsorbed depreciation. So you should have the answer as 172, 330. Am I clear? Am I clear? Question number 4. Very interesting question again. Mr. Naveen, aged 40 years, is engaged in manufacturing business. He follows mercantile basis. The details of his business are capital receipt turnover, amount received in cash out of the turnover, amount received in cash out of capital receipt, amount received through unapproved moves, total payment, cash payment, net profit. Is it clear? Okay, we'll come back to this after reading the question. An analysis of P&L revealed the following. Salary includes 15,000 paid per month, each paid to one security guard or in cash, fully disallowed. 15,000 into 3 into 12, 5,40,000 is disallowed. Other administrative income include 70,000 in cash. Payment in a day is less than 8,000 allowed. Interest charges paid includes interest payable to loan to Mr. Komal on which tax was not been deducted. Loan was taken for the purpose of business. 30% disallowance, 21,000. On the basis, choose the appropriate answer. Is Mr. Praveen eligible to declare income on presumptive under the provisions of Income Tax Act 1961? What is his turnover?
2.8.
What is his turnover received through approved modes? So 2.8 into 95%. So is he eligible? No, he is not eligible. Tell me.
Not able to understand that two line. Total payment, cash payment.
Total?
And the total payment and cash payment of
Others are approved mode payment. But the answer they have given in the institute material is yes. Since received in cash is do not but not received is another 12 lakhs circular. They are not adding it.
Capital discipline.
No. It is only 44 AD, not 44 AB. It is 44 AD. Take this answer as of now. I will confirm it to you. Institute material answer. This is should be. I'll just confirm it to you. I'll just confirm it to you. Take this answer. What would be your answer to MCQ1, assuming for the purpose of answering this and the next MCQ, Mr. Naveen has additionally received 10 lakh by way of crossed check, in which case, okay, since the turnover limit is okay, is only 2 crores, okay. D, he cannot avail 44 AD because turnover limit has exceeded 2 crores and cash payment has exceeded 5%. Cash receipt has exceeded. A and B, sorry. Cash receipt has exceeded, okay, A and B. Okay. Third question, is Mr. Naveen required to get his books of account audited? Okay, now only total turnover we should see, total receipt. Okay, total receipt is equal to, please write down, total receipt is equal to 1.2 plus 2.8. Oh, books audited. Okay. 1.2 plus 2.8. How much it comes to? 4 crores. Cash receipt is equal to 18 plus 2. 80, because they have said in MCQ2, for this and the next MCQ, okay, Mr. Navi, okay, 18 plus 2, how much? 20. Okay, cash receipt has exceeded 5%. Correct, 5%. 2.8, 20. 10, okay. 4 crores into 5%, 20 has not exceeded. But in this case, the institute has answered it as very differently. Yeah, since the payment exceeds 5%. 9 lakh out of 1.6. Payment exceeds 5%. Yeah, that is the reason. Payment has exceeded 5%. Payment has exceeded 5%. Not the receipt, but the payment has exceeded 5%.
So 18 plus 2.
ஆமா இங்க இருக்கணும் என்ன சொல்லிருக்காங்கன்னா for what would be our answer to MCQ1, assuming for the purpose of this MCQ and MCQ3 next also, the additional received is 10 lakhs. So already received is 8 plus 10, 18, another 2, 20. What would be the amount of profit and gains chargeable in the hands of Mr. Naveen as per books? So the net profit is 10.5. The net profit is 10.5 plus 5,40,000 plus 21,000. So how much will it be? 1611. This is the working. Am I clear? What would be the amount of profit and gains chargeable in the hands of if he does not want to get his books audited? My dear friends, 8 lakhs into 8%, no, this into 6%, balance into 8%. The 250 into 6%, balance 30 lakhs into 8%. Here they have done it rightly. I don't know how first question they have done it wrongly. Here they have done it rightly. They have taken that 30 lakhs into 8% because it is not received otherwise than by approved note. But in the first question, they have only taken 8 lakhs. That alone I will confirm. Other answers are the same like our institute material, but this alone I will confirm. Shall I? Are you understanding that? Are you understanding, Priyanka? Yeah. Mr. Shambhav furnishes the following particulars of the previous year of an industrial undertaking established in a special economic zone, manufacturing. Total turnover, export turnover, domestic turnover, profit. Export sales include freight and insurance 5 lakhs. It will be excluded from both ET and TT. It will be excluded from both, you can see here, okay, export turnover will not include freight, insurance and other charges. So this will become 80, this will become 40. Okay. He received a 30,000 rent for let out of a property. He earned interest on savings bank 15,000 and interest on post office savings 7,000. He shifted out of the default tax regime. Based on the above facts, choose. Compute the amount of export turnover and total turnover. It should be 40 and 80. Freight and insurance will not form part of both. Compute the amount of deduction available under 10AA. Profit is 20 into 40 by 80 into 50%. D. Okay. Okay. Compute the total income of Mr. Shambhav. Quickly we'll do that. Profit 20 minus exemption 5, so 15. Correct? Huh? PGBP is 15. House property is 30,000 into 12 into 70%. 30,000 into 12 into, after providing standard deduction, it will be 70%. Okay. Interest on savings 15,000. Interest on post office will be 3,500. 7,000 minus 3,500. 7,000 minus 3,500. So this will get you gross total income. He can claim 10,080 TTA. He can claim 80 TTA 10,000. So what will be his income? 1760,500. The detailed answer is here. Are you clear? Are you clear? Okay. Shall we go to descriptive questions? Okay. First, I am taking up article. Mr. Yuvan, a resident individual, is engaged in manufacturing. He follows mercantile. The net profit as per P&L is 20 lakhs. 25,000 paid to a creditor for goods in cash. 40A3 disallowance. Gross interest received in savings bank account. Contribution to notified approved research association for scientific research. If it is optional tax regime, allowed. If it is concessional tax regime, not allowed. Job work charges for value addition without deduction of tax by account payee check. Normal depreciation of 450 as per income tax, including depreciation of 15 lakhs being the cost of new machinery purchased and put to use. Subsidy on 20% on new machinery under technological upgradation scheme from the central government was credited to P&L. Wrong. Subsidy should be reduced from the cost of the asset. Insurance expenses include 50,000 for maintenance of his mother who is ailing from severe disability. I will do it while doing the total income classes. This will be 80 DD of 1.25 lakhs you can claim for severe disability. General expenses include revenue expenditure incurred for promotion of family planning amongst employees, not allowed for individuals. Mr. Yuvan purchased the raw material of 30,000 from Khanna and Co., a medium enterprise. படிக்கவே வேணாம். Not a micro or small. Additional information. Yuvan repaid a housing loan principal and interest availed for purchase of let out property. He received a rent of 3,50,000 from his let out property empty pay 40,000 was paid by him only on will not be allowed. He received 75,000 by premature withdrawal from deposit, including interest of 5,000 in post office time deposit, eligible for deduction under 80C. He sold gold bracelet, which was acquired for 40,000. A diamond was embedded into the bracelet for 5,000, 50,000. You are required to compute the total income and tax liability under default and optional. The turnover of the last year is given so that he has to deduct tax at source. The turnover of the last year is 250 lakhs, which means he has to deduct tax at source. I'm going step by step. It's like a total income computation only. Okay, start. Working note number 1 for house property. Working note number 1 for house property. Rent received, outer column 3,50,000. Less municipal taxes, nil, not paid. Example, we should show it, not paid. So you will get 350. You will get 350. Standard deduction. Standard deduction 1,05,000. Interest 80,000. So you will get IHP of 1,65,000. $1,65,000. Is that correct? Are you getting this? Are you all getting this? 165. Second, business or profession. Business or profession. Net profit 20 lakhs. Friends, I'm not writing detailed note. உங்களுக்கு என்ன எழுதணும்னு தெரியும். For that, I'm giving the answers also. So don't worry. Net profit 20 lakhs. Add 40, add under that 40A3 25,000. 30% of Raja.
Could you repeat once?
Yeah. Net profit 20 lakhs. Add 40A3 25,000. Creditors paid in cash. 30% of job work charges 33,000. 33,000. Personal insurance 50,000. Personal insurance 50,000. Promotion of family planning 75,000. Promotion of family planning 75,000. Medium enterprise nil. Please put it as medium enterprise nil. less savings interest 15,000. Savings interest 15,000.
The net and the concept.
சேவிங்ஸ் பேங்க்குக்கு எப்பயுமே டிடிஎஸ் கிடைக்கும். இன்ட்ரெஸ்ட் ஆன் சேவிங்ஸ் பேங்க் இங்க கொடுத்துருக்கதே கிராஸ் தான். ஸோ டோன்ட் வரி. பட் சேவிங்ஸ் பேங்க் அக்கௌண்ட் நோ டிடிஎஸ். ஓகே. அண்ட் சப்சிடி 15 lakh into 20%. 15 lakh into 20%. 15 lakhs into 20%. 3 lakhs. 3 lakhs. Less depreciation. Less depreciation. So அவங்க 450 charge பண்ணிட்டாங்க ஏற்கனவே. Okay, please understand how the depreciation working. Normal depreciation 450 as per income tax law is already charged. Okay, ஆனா they have made a mistake. இந்த 15 lakh இந்த 3 lakhs minus பண்ணல இந்த 15 lakhல. Okay, so and they have not charged additional depreciation. Now we need to do it. Look at this how I have worked out. Okay, as per information 450 அவங்க charge பண்ணிட்டாங்க. Less 15% depreciation charged on new machine 225, but actually the value of the machine should only be 12 lakhs after adjusting subsidy. So it should have only been 80,000. No, ஒரு நிமிஷம் வெயிட் பண்ணுங்க. And additional depreciation 240. நீங்க நாம என்ன பண்ணலாம், இந்த 450 ஆட் பண்ணிட்டு இந்த 645 மைனஸ் பண்ணலாம். இல்லாட்டி அடிஷனலி 2 lakh நான் 450 ஆட் பண்ணிட்டேன் இங்க. ஓகே, நார்மல் டிப்ரிசியேஷன் நான் 450 ஆட் பண்ணிட்டு 645 மைனஸ் பண்றேன். இல்லாட்டி தட் அடிஷனல் போர்ஷன் alone of 1,95,000 நீங்க மைனஸ் பண்ணணும். However it is, but இது டீடைல்டா எழுதிங்க ப்ளீஸ். Is it clear? Is it clear? Are you getting it? Are you getting how I work the depreciation? Are you understanding it? Okay. So what are you getting? 1673. Now, same continue. If it is concessional regime, 1673 plus additional depreciation of 240 and this 110 which I contributed to scientific research. If it is concessional regime, this 1673 plus additional depreciation 240 and 110 of scientific research. Clear? Okay. Capital gains computation. Sale value 5 lakhs minus 90,000. Sale value 5 lakhs minus 90,000. 4 lakh 10,000. 4 lakh 10,000. Sale value information D, it's there. Sale value 5 lakh minus 40 plus 50, 90,000. So 4 lakh 10,000. IFOS, interest from savings account 15,000. Interest from savings account 15,000. 15,000. Now listen, please. Listen, please. You have said that for 5 years I will keep the deposit, but you have withdrawn. He received 75,000 by premature withdrawal, which means you have claimed 80C on this, saying 5 years you will keep it. But now you are withdrawn. Of that, interest is 5,000. So 70,000 you need to reverse it. Premature withdrawal on which 80C is claimed. Premature withdrawal on which 80C is claimed. 75,000. So our total income calculation is here. I'm not wasting your time. Okay, just look at the answer. Anyhow, I'm sending you the answer. Okay, this is just accumulation of whatever we put. Okay, house property, business or profession, LTCG, other sources, GTI, 80C for the principal portion, 80DD, that is, and 80T. Nothing can be claimed there. We all know this is taxable at 12.5% in the both regimes. Others are taxable at slab rates. Others are taxable at slab rates. Am I clear? Am I clear? Can I move on? Mr. Ayush, a resident individual aged 62 years. If we are working out the optional tax regime, basic exemption limit is 3 lakhs. Remember that. Second thing to remember, 80D and all, he will get 50,000. Okay. Runs his own clinic. Consult on the credit side. Consultancy, salary, house property, dividend. On the debit side, salary to staff, admin, rent, conveyance, power and fuel, interest on housing loan, interest on educational loan, ATE. This is house property. Amount paid to Scientific Research Association, approved. He is working as a part-time with a hospital. His salary details: basic pay, transport allowance. His son has undergone medical treatment in a hospital owned by employer. No problem. The hospital would have charged 160 for the similar treatment. He owns a residential house. The reconstruction of the house started on 1/4 and was completed on 39. So within the same year. After reconstruction, ground floor of the house is self-occupied. First floor is let out. Both the floors are of equal area. The monthly rent is 40,000. The tenant also pays 3,000 per month as power backup charges. He took a housing loan of 25 lakhs for reconstruction. Interest amounted to 120, and for the period 112, totally 220. It is within the same year. There is no pre-construction. During the year, he also paid municipal taxes of last year and current year. Other information: conveyance expenses include a sum of 48,000 incurred for conveyance from house to hospital and vice versa. Power and fuel include 10,000 incurred for generation fuel for providing backup to the tenant. Administrative expenses include municipal taxes for his house. Clinic equipment details are opening WDV and 5 lakh fresh was purchased, is rupees 75,000, which was paid in cash. Out of 5 lakh, 75,000 paid in cash. So I will record the purchases as 4 lakh 25,000. Nothing can. He availed a loan for his higher son's education, paid principal and interest. You are required to compute So standard deduction will be 50 or 75. So 1030 or 1005. Okay.
Sir,
Now let's move on to house property.
sir, 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 in between
Yes,
or 5
Ananya.
minutes you are on mute.
1 minute. I'll just change it. Sorry. You. Can we? Now, house property details. I am reading it again. He owns a residential property, and what purpose the loan is taken? Reconstruction. So, self-occupied maximum 30,000 only you can claim. Self-occupied maximum 30,000 only you can claim. You are again not able to listen. Okay, I'll also I will share. If there is anything, please call me, Ananya. Yeah. Okay, he owns it. So reconstruction. The loan was taken for the purpose of reconstruction. So self-occupied 30,000. Now, after reconstruction, ground floor is occupied and first floor is rented out. Okay, house property particulars, self-occupied, let out. Rent 40,000. See, for the power backup, IFOS, composite rent, that will be under IFOS. 40,000 into 6. 240. That's what will be also credited. Yeah, 240. 40,000 into 6, 240. Okay. Minus empty paid. They have given somewhere the information. Administrative income 10,000, municipal taxes paid, minus empty paid 5,000 for house. 50% is only let out. Okay, 55,000 minus empty paid 5,000. That makes it 2,35,000. Provide standard deduction. Provide standard deduction and 1,10,000 as 1,10,000. Please remember 30,000 for loan is for reconstruction. So 30,000. That 30,000 also you cannot claim if it is concessional tax region. The working on your screen. That's me. I hope now it's solved. I also sharing the screen. Is it clear? Is it clear, all of us? Okay. Can we go for business income? Computation of business income or professional income. Computation of professional income. Fees received 74,28,000. Fees received 74,28. Fees received 74,28. Less allowable expenses. Allowable expenses. Salary to staff 720, no problem. Salary to staff, no problem. Administrative expenses, my dear friends, out of 1164, we find something as 10,000 municipal taxes. So 1154. Rent of clinic, no problem, 576. Conveyance expenses, my dear friends, 144 minus 48. 144 minus 48. Some 96. Okay. Power and fuel, my dear friends, 144 minus 10. Contribution to research, 150. Contribution to research, 150. Depreciation, depreciation, 5 lakh into 15%. That's 75,000 you cannot claim. You cannot claim paid in cash. 5 lakh into 15%. So you will get the business income. If you add that 110, you will get that contribution, 150 scientific research. Are you understanding? Okay. Now for the total income computation, my dear friends, total income is salary income we have done, house property, business or profession, dividend is directly given, power backup charges minus the expenditure, you will get the total income. The question is only total income, not tax. If at all they asked us, remember 50 lakhs it has crossed, so we should also compute surcharge. Is this clear? Okay. So this is 14 marks question. This is how that 14 marks question comes for us. This you can work out. I'll send you the answers also. Question number 3. Mrs. Natasha is carrying on business of manufacturing of textile manufacturing. The total turnover, so TDS is applicable. The net profit is 1561. received a subsidy of 20% on new machine during the previous year, which has been credited, so I will remove it. Job work charges paid 90,000 without deduction of tax. You have two assumptions. For 194C, single payment should not exceed 30,000, cumulative 1 lakh. You can assume it as a single payment and assume 30%. 25,000 paid to sundry creditors in cash. Interest. Look at this. Interest amounting to 2 lakhs authorized by a firm at 15. She is a sleeping partner of that particular firm. First, while computing PGBP, I will remove this 2 lakhs. Then I will add back 12%. Okay. Depreciation has not been debited to P&L. The details are opening WDV, new machinery purchased, payment made by account pay check, sold a own machine. She does not own any other fixed asset. Incurred loss of 1,17,500 from an eligible transaction carried out in derivatives in recognized stock exchange. Two assumption. You can take it as a speculative loss, but they have not given, so you can take it as a business loss also. You can take it. They have not given that this is of a speculative nature. Commission paid to one agent allowed as deduction in the earlier assessment year is now received back. Section 41. Deemed income. Deemed income. She received gold coin 55,000 from her cousin, daughter of her uncle. Gift. Taxable. Exceeds 50,000. She deposited 50,000 with Life Insurance Corporation for maintenance of her mother who is ailing from severe disability. She sold a vacant land for 1525. The land was purchased for 418. You are required to compute the total income and tax liability under both regime. Okay. Okay, I will quickly do it first. Computation of business income. Numbers மாத்திரம் எழுதலாம். எது புரியலையோ அதுக்கு மாத்திரம் எழுதிக்கலாம். Okay. Profit 1561. Add TDS default 27,000. நான் single payment assume பண்ணிக்கிறேன். 90,000 into 30%, 27,000. Creditors paid 25,000. Okay. Commission received 50,000. அதுவும் add தான், ஏன்னா அது income. அது additional informationல இருக்கு. So they have not credited it. Commission received 50,000. Less subsidy. New machine oda value inga பாருங்க 725. 725 into 20%. 145. 145. Interest on capital within bracket 2 lakh. Interest on capital within bracket 2 lakh. First அத இந்த பிசினஸ்ல எடுத்துடலாம், ஏன்னா கிரெடிட் பண்ணிருக்காங்க. அப்புறம் தனியா ஒர்க் அவுட் பண்ணலாம். Depreciation. Friends, opening balance 475 plus new machine after adjusting subsidy minus sale value into 15%. 1,47,000. 1,47,000 is normal depreciation. 1,47,000 is normal depreciation. Additional depreciation New machine order value 725 minus 145 into 20%. 1 lakh
16.
16. So what is the business income? One lakh,
9 lakh. 10 lakh.
10 lakh 55. Ten lakh 55, correct? Huh? And if it is concessional tax regime, you will add back that 160. Okay, you will add back that 160. நான் டோட்டல் இன்கம்க்கு போறேன். டோட்டல் இன்கம்க்கு வேற எதுக்கும் ஒர்க்கிங் நோட்னு பெருசா தேவையில்லை. கேபிட்டல். ஓகே, டோட்டல் இன்கம்க்கு போறேன். ஓகே, ஐம் கோயிங் ஃபார் டோட்டல் இன்கம். PGB optional concessional. PGBP under that textile fabric business. இப்ப நீங்க கண்டுபிடிச்சாமோ 10 lakh 55 and அந்த 116 ஆட் பண்ணுங்க. கன்செஷனல்ல அந்த 115 116 ஆட் பண்ணுங்க. ஓகே, இன்ட்ரெஸ்ட் ஆன் கேபிட்டல் அது PGBP ல் தான் taxable. For the partner it is taxable under PGBP. Interest on capital at 12%. 2 lakh divided by 15 into 12. 1 lakh 60. 1 lakh 60,000. Less loss from trading business. One lakh 17,500. Heading capital gains. அப்படியே அங்கேயே போடுறேன். ஓகே, 1525 minus 4,80,000. 15,25,000 minus 4,80,000. 15,25,000 minus 4,80,000. 10,45,000. Okay. IFOS, gift of gold coin 50,000. Gift of gold coin 55,000. Sorry, 55,000. Deduction la 125. Is this the answer you're getting? Deduction 125 under optional. Just check the answer. Is it clear? Is it clear? Now I'm putting one extra working. Okay, I'm doing one extra working. Okay, computation of tax for capital gains. Please do it. Please do it. Please do what I'm saying. Computation of tax of capital gains. CG without indexation 10,45,000. CG without indexation 10,45,000. CG with indexation. Friends, அது கீழ bracketல 15,25,000 minus 4,80,000 into 376 by 220. கொஸ்டின்லயே கொடுத்திருக்காங்க இண்டெக்ஸ் வேல்யூஸ்லாம் 15,25,000 minus 4,80,000 into 376 by 220. How much? 7? 1 spoon? 17 lakhs. 1525 தான சேல் வேல்யூவே 1525 தான சேல் வேல்யூவே $4,80,000 into 376 by 220. Okay, 704,636. 704,636. Now find out whether 12.5% without indexation is beneficial or 20% with indexation is beneficial. I think without indexation is beneficial. 130,625. Okay. இது மாத்திரம் எப்பயுமே ஜாக்கிரதையா இந்த கொஸ்டின் வரும். Asset sold is immovable property sold by an individual. So in the option அவங்க எடுத்துட்டு அதுக்கப்புறம் மிச்ச taxes will be in the normal format. You're clear in this? You're clear in this, all of us? இது மாத்திரம் ரொம்ப கேர்ஃபுல்லா ஒர்க் பண்ணுங்க. கேபிட்டல் கெயின்ஸ் ஆன் லேண்ட் எல்லாம் இருக்கும்போது கோல்ட் எல்லாம் விட்டுறலாம். லேண்ட் எல்லாம் இருக்கும்போது ரொம்ப கேர்ஃபுல்லா ஒர்க். Actually, I'll be happy to work out September 26 question. It's May. Okay. Okay, we'll complete this question and wind up for the day. Mr. Prakash is a resident individual, aged 64 years. He is in the business of manufacturing tire. He prepares his accounts. His net profit is 1,20 lakhs after debiting the following. Depreciation as per books, we will add back. In the question, sorry. Interest paid on, loan taken from a scheduled bond to buy pollution control equipment. Amount of loan, interest, loan was taken. Entire interest was debited to P&L. நம்ம பின்னாடி பார்க்கும்போது டேட் ஆஃப் யூஸ் கொடுப்பாங்க. அது வரைக்கும் இருக்கிற இன்ட்ரெஸ்ட் நான் பொல்யூஷன் கண்ட்ரோல் எக்யூப்மெண்ட்ல ஆட் பண்ணோம். மிச்சம் இருக்கிற இன்ட்ரெஸ்ட் தான் எக்ஸ்பெண்டிச்சரா கிளைம் பண்ண முடியும். Purchase of raw material include 1 lakh towards purchase from a micro enterprise. The purchase was made on 1st February, but the payment was made on 20th July. Disallowed. Due date la பார்க்கவே கூடாது. 15 days or 45 days தான். Interest 250 on enhanced compensation on compulsory acquisition of factory building by the government based on court order. However, he actually received the interest in the next year only. It is taxable next year. Always it is taxable in the year of receipt. 50,000 given as contribution for a political party, okay, will not be allowed as expenditure, but you can claim 80 GGC under optional regime. 2 lakh received as dividend from Indian companies during the year and credited to P&L account. 65,000 interest was paid on that. ரெண்டுமே ரிமூவ் பண்ணிடுவேன். ஆனா மேக்ஸிமம் இன்ட்ரெஸ்ட் கேன் பி 20% ஆஃப் த டிவிடெண்ட். ஐஎஃப்ஓஎஸ்ல போடும்போது மேக்ஸிமம் இன்ட்ரெஸ்ட் கேன் பி 20%. He had taken a housing loan from a scheduled bank for purchase of a flat, self-occupation. Interest principal payment is reflected. Municipal taxes. A new machine costing 50 lakhs was purchased on 1st September 24, installed on 24th October 24. He did not own any other asset on the earth. So last year or the depreciation போட்டுட்டு we have to find out the opening balance. இந்த வருஷம் போடும்போது last year உடைய balance additional depreciation போடணும். He also imported an air pollution equipment which was previously used outside. So additional depreciation கிடையாது. It is not a new asset. It is not a new asset. At a cost of 10 lakhs on 1st June, he took a loan of 852 on 1st June. The equipment was delivered and put to use on 1st October. Okay, நான் உங்களுக்கு working காமிக்கிறேன். You just see whether you are understanding my working. Working note for interest. Total interest is 8,52,000 into 10% from 1st June, 71,000. Interest to be capitalized. Any expenditure till the date of putting the asset into use should be capitalized. So interest to be capitalized is for June, July, August, September, 4 months, 28,400. Are you understanding this working? Okay. Interest to be taken as revenue expenditure is only 42,600. இப்போ என்னுடைய working இங்க பில்டிங்கும் ஒன்னு கொடுத்திருக்காங்க. During the financial year, the central government compulsorily acquired the factory building. He received compensation last year and deposited in CG. இதெல்லாம் last year. The building was purchased by him. He has shifted a new factory building was purchased by him for 15 lakhs. A new factory building was purchased by him on 1st April 25 for 15 lakhs. அதோட working depreciation ஓட working தான் இது. லாஸ்ட் இயர் நான் ஒரு மிஷின் வாங்கியிருக்கேன் 50 lakhsக்கு. அதுக்கு நார்மல் அடிஷனல் போக அதோடைய ஓப்பனிங் பேலன்ஸ். Purchase of a new building this year. Import of second-hand machinery. Interest to be capitalized. So, இதுக்கு normal depreciation, additional depreciation for last year I would have claimed only. Remember, additional depreciation cannot be claimed for pollution control equipment as it is. So, check whether you are understanding this working. Rita, Priyanka, you understand? Okay, so this is the depreciation I will be computing. Now, I'm just taking you through the question. Okay, for the business income, net profit, depreciation as per books, interest which should not be accounted, okay, because it should be capitalized, micro enterprises payment 1 lakh, political party 50,000, interest for the purpose of earning dividend, okay, non-business income, in and interest on enhanced compensation and dividend. I'm getting under optional tax regime 113. Concessional tax regime la add back that depreciation alone 118. Okay. Here is my net working. Okay. House property, it is a self-occupied property. Only interest will be allowed only under optional regime 2 lakhs. Business or profession, capital gain, the compensation was received last year, hence no treatment in the current year. Other sources, dividend minus 20% of dividend is the maximum. In an interest on enhanced compensation, taxable only in the year of receipt, that is next year. You will get 80C and 80G. Okay, work out these questions whenever time permits for you. Okay, other 4 questions, simple questions only, you can just check, or we'll work out in the subsequent classes, because in the subsequent class it's going to be only total income working. It's only going to be total income working. PGBP, what type of question they can ask? Remember some of the key factors they ask. A micro small enterprises, for tedious disallowance, relative payment, depreciation, they always ask the cost of the asset, etc. So if you are able to do those things, whatever we did today is more than sufficient for you to, if you revise that, that is more than sufficient. Okay, I know the friends here are aware of it. For the friends who are there online, okay, apart from this book, I can also, I'm trying to publish my other book also, that is the classroom practicals material along with solution. Somebody here is verifying that. Once it is done, I will put it in the group. But if you want that soft copy is essential enough for you. But if you want a hard copy, that alone, the printing cost alone, you have to pay and get the hard copy from our admin team here. They will provide you the hard copy also if you need. By this week, we will I will publish it. In another 4-5 days, I will publish the book also, so that that can also be referred. But that book is only whenever you are very confused. What we are doing in revision is 200% sure. This is more than sufficient. These direct to examination classes, the focus is very clear for me. I am very confident this is more than enough to take you. Another 2 more classes of direct taxation will become more stronger in DT. Meet you in the next class. All the best, friends.
Thank you, sir.